GCLA TV.
Welcome to GCLA TV, where we go one-on-one with the brightest minds in the travel and transportation world. I'm your host, Sara Eastwood Richardson, Executive Director of the Greater California Livery Association. Besides being a longtime friend and a respected colleague, Matt Daus is the longest tenured commissioner for the New York Taxi and Limousine Commission, serving both Giuliani and Bloomberg for over 9 years. He is now a partner at the law firm Windels Marks, Lane and Mittendorf. Matt is also the Transportation Technology Chair and Lecturer for the City University of New York and President of the International Association of Transportation Regulators. Welcome, Matt.
Good to be here, Sarah. Thanks for having me. So great to see you.
Let's get right to it. Here's what's on operators' minds right now. One, is there any reprieve we can expect through business interruption insurance? Now, we know business interruption insurance indemnifies the loss of revenue that operators would have earned had there been no stopping of business. And the idea behind this kind of insurance is to protect income in the case of a natural disaster. Operators want to know if a pandemic qualifies. What say you?
Well, it's a good question. The norm is that a disease or a virus is not typically a covered peril. There's a lot of loopholes in terms of whether some policy language, which was not artfully crafted, could give transportation companies the ability to claim that they're covered. And I know some people that have actually had success in getting the coverage, but it really depends on company by company, policy by policy, state by state. There's been an outcry from folks in California, but there hasn't been a bill that I'm aware of that's been introduced. There is federal legislation as well that's being or has been introduced. Carolyn Maloney, Congresswoman from New York, she's got a bill in that would back up the potential losses for voluntary coverage for a pandemic in the future. I think there's a constitutional issue and legal issues about going retroactive. But I know that her bill would, similar to what happened with terrorism risk insurance following 9/11, it would allow the federal government to back up the claims, but make it of a clear-cut opportunity to get the coverage. It's an interesting concept. Obviously, insurance is a state-by-state issue. So we've been fighting with insurance companies around the country on some of these issues, and it's mixed results. It really is. It depends on the wording of the insurance contract. We've never been down that road, but just like, I was commissioner 2 weeks before 9/11. And, the bottom line is we weren't ready for that. And now we are. They'll have the right insurance. They'll have, the right protocols in place, and we'll be prepared. And this won't happen, hopefully, to the same extent, even if we get a recurrence. So let's keeping an eye on it, of course.
Matt, I hear you say it's unlikely that operators can make a claim under the business disruption argument, unless by chance their insurer offered it and they opted into it. Regardless, operators should be meeting with their insurance companies and assuming pandemics are a part of our life now and negotiating those protections for a pandemic into their future policies, right?
Right. They should inquire about, an endorsement. Most of these insurance contracts allow for supplemental insurance coverage. You have to pay an extra premium, but it will clearly and succinctly say this is for viruses and diseases. If the company doesn't have that clear language or doesn't have that option, you can look at the language of how they drafted it, and depending on what the policy says, you might have a case. But we haven't been seeing too many people be successful on that. So I think we're going to probably need to have some type of legislative solution in California and other states in the country as well.
Let's move on and talk about Uber for a minute. Uber is banking on overturning AB 5 by way of the polls this fall. They, along with Lyft and Instacart, are set to spend $100 million in ads to sway voters to overturn the law. California is claiming to fight fire with fire. They want their tax money. So how do you think this is going to all play out?
Well, if I had a bet on it, I would probably bet that it doesn't pass. I think the problem that Uber and Lyft have with getting this done and spending this money is the presidential election. I've seen surveys and polls. I don't know if you followed or heard about Harry the rideshare guy. Most of the drivers don't want to be employees or have unions. I believe this. This is my experience when I was commissioner. Many of the drivers just like their freedom. They don't want to be told when to work and how to work. And what I find really interesting is just like Hillary Clinton, before she lost the presidential election, was coming down on the side of the drivers, supporting something similar to AB5. Joe Biden has actually come out and said that he is in support of having AB5 apply specifically to Uber and Lyft and gig economy workers. So he's waded into this turf, and turnout because of the anti-Trump venom from many voters in many liberal parts of California, is the big X factor working against Uber and Lyft. Because look, there's no love lost for big Silicon Valley companies these days. Look, this has already affected an election already. Republican Mike Garcia, I think he's in the 25th district in LA. He was against AB5, and the people spoke, and the majority, a lot of people in California don't like it as a concept, right? Because it affects all these businesses. And Uber and Lyft are not going to get as much sympathy, I think, coming out saying, hey, we're special because we have 100 million that we're spending, and we should overturn this law for us. But what about the barbershop? What about the small business? But there was AB5 as a campaign issue. So it'll be really interesting to see if the issue raised by the referendum, which it probably will, it's going to be hard to overlook tons of ads that Uber and Lyft are going to roll out.
California says they're going to come out with their own series of advertisements. They're earmarked to spend $20 million come September. So they must smell money. I mean, how much tax money is on the table here?
It's a lot. And you know what? It's piling up. But if there wasn't a presidential election in this climate, I would say Uber and Lyft would have the ability to pull it off. It's now a 50-50 shot, I think, at this point.
Really?
I'd bet against Uber and Lyft because of the Biden factor. That Biden is going to cause a massive turnout in California for obvious reasons. And it'll be interesting to see.
Let's pretend for a second that Uber and Lyft lose. California is their #1 revenue state. What's the implication there for the future of Uber and Lyft?
I think that's a really good question. I've been pondering this for a long time, and a lot of people in the industry have been wondering what will happen. I believe they must have a plan B and a plan C. I think, their plan B, if they lose, they're going to have no choice but to raise fares. They just can't do it any other way. Number two, I think they're going to cherry pick their drivers and keep the best ones. And now that they don't have to worry about controlling them, they're going to right-size their company. They're going to have to go to plan B. And we may not be happy with plan B. Plan B may be they may become more like us, right-size the company and actually compete with us and take away some of the arguments that we have, especially in the corporate travel sector, that we do better than them, we're safer than them. So be careful what we wish for. I think post-pandemic, we may end up having like Uber, Lyft, and a couple of big limo companies doing mergers and acquisitions. There's going to be a restart button that's hit for the pandemic, right? Everybody's going to be looking at businesses fresh, as we had discussed in the past, Sara. But now there's a double restart button. What happens after the AB5 referendum?
What about the reimagining of inner cities? I'm seeing Los Angeles, San Francisco, New York, Chicago. This pandemic got the traffic off the streets, and a lot of mayors are starting to talk about not opening those streets and instead turning them into walk streets and using this as a springboard for geofencing urban environments and keeping the cars and trucks out. What do you think?
Yeah, I actually think that's a really good point. And I think, if you look at local departments of transportation, and when you talk to these folks, their mission is to get rid of cars and to alleviate car culture and provide more sustainable options, right? So they've been chomping at the bit for years to get more bikes and scooters and get people walking and get cars off the streets. This pandemic has given them the opportunity to speed up that timeline big time. And
Oh, wow.
I think that type of opportunity gives the advocates and the local DOT commissioners the ability to test and experiment with certain things, and sometimes those things stick and they stay. Look at what happened under Bloomberg with Commissioner Sara. They engaged in an experiment, right, to create pedestrian plazas and bike lanes in Times Square. And they said it was going to be a temporary pilot program that was they're going to see if this helps, alleviate congestion. I had to give the mayor and the DOT commissioner the data that showed that car speeds did not increase as a result of this retooling. In fact, they decreased. However, the mayor came out and said, it's been such a great boon for the businesses in the Times Square area. We're going to keep the pedestrian plazas and we're going to keep the bike lanes. I think there are going to be certain streets in certain urban cities and urban liberal cities, San Francisco, Portland, Seattle, New York, Chicago.
Oh, yeah.
I believe that there are going to be streets that are claimed or restricted forever for cars, Sarah. Congestion is going to go up in the short term, possibly in the long term. Remember, every time you close a street, you're creating more congestion. And on top of that, the government needs money, as you had aptly mentioned previously. So, they don't have a problem with the congestion. Okay, people are going to take cars because they don't want to take mass transit. They don't want to, they want to get around this summer by renting cars or taking their cars out. Congestion is going to be on the rise, which means that congestion pricing is going to come to every major city. So they're going to close roads. People are going to be in the great weather using scooters and bicycles and stuff like that, eating outside. And then when the time comes, when it gets colder out, the city's going to say these streets are closed permanently. And traffic and congestion is going to go up, and the government's going to make up for a lot of the money it lost during the pandemic by doing what we just did in New York City, which is to start charging. They're all going to do it.
So what's congestion pricing, and how much is it?
It's $2.50, and there's different price structures for different types of vehicles. But it's really an MTA tax that goes in New York to pay for mass transit repairs. So it really is kind of a screwy policy in some ways because, taxis and limos and black cars compete with mass transit, yet they're charging their passengers money that's going to subsidize their competition. It's not just paying to use hot lanes. It could just be getting onto the expressway is going to be a charge. And they have transponders that do it. Just like you have at the airports to, for the limos to go to and from LAX. The technology's there. You're gonna see it coming everywhere. And the industry won't be exempt from it, which is a big issue. The play for the money, for the tax revenue is huge.
I have a question about the PPP loan and what financially this is going to look like on the back end once we're trying to recover. Thoughts?
Everybody, both sides of the aisle, they obviously wanted to help all the industries. I think a couple of things happened. The CARES Act was passed very quickly. I really don't believe that many Congress members understood how our industry and hospitality and restaurants really truly operate, or they didn't really have the time to consider because they were under the gun to pass something. So, it was kind of an afterthought, so the progressives in the House had convinced Pelosi to move forward with a law that would increase the unemployment benefits to levels never seen before. There's a lot of conspiracy theories as to why that happened, but I think the payroll protection program was a political hot potato between the left and the right as we enter a presidential election. For the Democrats want to have as many people out of work as possible on the books, okay, so that they can get rid of Trump. And Mnuchin and Trump, on the other hand, and the numbers that came out last week prove that the PPP immediately causes people to come off the unemployment rolls, and the employment rate goes right up. So I think that the amount of money that an independent contractor driver, or any driver would make okay, if they got PPP as a sole contractor, is almost equal to the amount that they get if they stayed home and didn't work under unemployment. This was thought out ahead of time. So I think a lot of it is just federal Dem versus Republican politics.
Who's winning there? Because during the month of May and June, we saw new jobs, new hires reach 2 million, if I'm not mistaken. In fact, it broke all historical records as far as new hires are concerned.
It
And
was
then
that
the month of
was a
June,
direct
the month of
result
June, the
of
month of June,
the PPA's provision, Sarah, saying you have to rehire. The administration carefully thought about this, and it gave a boost, as you can see, to the market. But I think ultimately the PPP is a good thing because it really did provide free money to people. Okay, I don't know. Ultimately, we're going to be paying for this for generations, because the government is going to audit everybody. Forget about auditing you on your PPP loans. They're going to audit everyone making over a certain amount of money. The threshold has just gone down for the IRS. They're going to be auditing everyone under the sun in the next couple of years. And that could include labor audits, talking about 85, independent contractor businesses. The government is going to find, just like they did after the Great Recession and after 9/11, when I was working for the government, I saw it with my own eyes. They're going to look for any potential funding stream that they possibly can to get money. Extending the covered period until the end of the year, not just June. That really provided a safety net and cushion for these companies. I think for this industry, it's better that we had it than we didn't have it.
It's great insight, Matt. Thank you very much. And thanks for your time today. This brings GCLA TV to a close. We want to thank our sponsor, Century Business Solutions, and to all our viewers out there for watching us. We'll catch you next time. Thank you.